Is your agency losing the QBI deduction? Most CPAs get this completely wrong. If your CPA told you your marketing or PR agency doesn't qualify for the QBI deduction, there's a very good chance you're overpaying taxes by tens of thousands of dollars. I'm Craig Cody, I'm a CPA, and I work exclusively with marketing and PR agency owners doing between $1 million and $10 million a year in agency gross income. Today, I'm going to clear up one of the biggest tax misconceptions I see, whether your agency is actually a specified service business where you lose the deduction, and how that impacts your QBI deduction. The big mistake is calling all agencies SSTBs, or specified service trade or businesses. Here's what most generalist CPAs do. They hear marketing agency and immediately classify you as an SSTB. And that's a problem, because with that, once your income gets too high, you can lose the full deduction. So what happens is you grow your agency and then the tax deduction disappears. That's not a strategy, it's a missed opportunity. So what actually defines an SSTB? The IRS doesn't say marketing agencies are or are not SSTBs. Instead, they define SSTBs as a business where the primary value comes from advice, expertise, or reputation. Think consultants, lawyers, accountants. So the real question is, are you being paid for thinking or for doing? Why most agencies are not SSTBs? Let's be honest. Most agencies are not just giving advice. You're executing, you're delivering campaigns, creative, media buys, SEO, content, project-based work, and that's not consulting. That's production and delivery, and that distinction makes a big difference because execution-based agencies often qualify for the full QBI deduction, which is 20% of your net profit. When an agency becomes an SSTB, now this is where the nuance matters, because some agencies do fall into that territory. Here's what happens. You're primarily selling strategy or advice. The owner is the brand. The clients hire you, not the agency. There's minimal team fulfillment infrastructure. Revenue is really tied to your personal expertise. At that point, you start looking more like a consultant as defined by the IRS for QBI, and then you get hit with the QBI phase-outs. A quick question here. Are your clients paying you more for strategy or for execution and delivery? Drop that in the comments as I read them all. So why this impacts your taxes in a big way? It's not just technical, it directly affects your bottom line. Let's say your agency generates $500,000 in profit. Your QBI deduction could be up to $100,000. Now imagine losing that just because your CPA classified you incorrectly. That's real money, and unfortunately, I've seen that more than once. See, it's not just a classification thing, it's a positioning. Here's what most people miss. This isn't about what you call your business, it's about how your business is structured, positioned, and documented. That includes your contracts, it includes revenue streams that are tied to agency gross income, how your work is delivered, what your team structure is, and if those don't support your position, you don't have a defensible tax strategy. So some key takeaways here. Let's recap this. Not all marketing and PR agencies are SSTBs. Most agencies will qualify for the full QBI deduction, and the misclassification is extremely common. The difference comes down to advice versus execution, and proper positioning can save you significant money. If you're not 100% sure how your agency is classified, or you've never had a proactive strategy built around your numbers, you're probably leaving money on the table. We work with agencies every day to increase agency gross income, improve cash flow, and to legally reduce taxes. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got two things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.